We'll move on to markets now, and China made news this week with a promise to buy more U.S. soybeans. We'll have the details on that. Plus, we'll check on harvest in South America. We'll have some tips if you're looking to market some old crop. And the USDA has released dozens of reports that had been delayed because of the government shutdown. On Thursday, just before the release of those reports, I was joined by Luke Beckman of Central Valley Ag. We began our discussion by hearing his thoughts on what he's looking for in the reports.
Well, I think, Troy, the market's really interested to see what the yield's going to look like. If we remember, and it's been a while, you go back to the USDA reports, and with corn, the yield's been getting smaller the last two reports. History would tell us in years where we see a reduction in both the October and November reports that we get another one in January. So the market's leaning that direction. To what degree is the question? I think if we can get greater than a 2 bushel per acre reduction in corn, you're going to see, a good reaction to the upside, in the corn market. The question I think that you also have to ask yourself is what's the USDA going to do with ethanol demand? Margins have been under pressure for quite some time as crude oil prices have been low and ethanol stocks have been high. So it's going to be the game of how much can the crop be reduced, and will the demand reduction offset the crop production being pulled lower? So overall, corn fundamentally is in a good position. To what degree will the crop get smaller is going to be the question, I think, on Friday. Stocks numbers are always interesting to see what feed demand looked like in that first quarter. Animal on feed numbers are solid through that first quarter, so we would expect feed demand to be solid in Q1 of this year. So corn-wise, that's what we're looking for. On the bean side, it's a little bit more interesting on the yield side, because you can remember the yield went up last fall a couple times, and then in November it dropped. We don't have a lot of analog years throughout history that tell us what the January final number is going to do in a year where we saw it go up twice and then come down in November. I think with the late season challenges that we had, especially in the western and northwest belt, we would expect maybe soybean production to come down as well. Same story though, exports were down 40% in the first quarter with China out of the picture. We would certainly expect exports to get cut on Friday as well.
Yeah, and that leads into my next question, because maybe relations with China getting a little bit better, because reports coming out this week, China's going to buy 5 million metric tons of soybeans. What do you think the impact is going to be for farmers at home with that news?
Sure. I think, between the initial announcement of 5 million metric tons and then an additional 5 million metric tons, so 10 million metric tons of soybeans to be purchased by the Chinese, we've received confirmation that some of that business has been done. Some of it's being done out of the U.S. Gulf. Actually, the majority is being done out of the U.S. Gulf and some out of the Pacific Northwest. We need to see more. That needs to be a deeper market to really cut into the export problem that we created in the first part of this marketing year. And we have to keep in mind that South American soybeans are starting to come off in Brazil. So just from a competitive standpoint, this will be some trade posturing and some goodwill as they try to hammer out a trade deal, and that's really what these soybean purchases mean. If you had to ask me, I don't think there's a lot of depth to it in saving exports for this season. It'll be what can we create for the 19-20 marketing year looking forward.
And you touched on South America a minute ago. Can you talk about what you're seeing there? Any weather concerns? I know it's harvest there right about now.
Sure. The South American harvest has started. There's been some dry concerns in Brazil that's tempered some expectations in terms of what production will look like. So we've seen those estimates work lower over the last month. But overall, I think Brazil's still going to have a serviceable crop. Combined with Argentina, that two-country production is going to be just fine. They're about 25% harvested right now in Brazil, so that's ahead of pace. What that does, Troy, is it allows the Brazilian farmer to get the second crop corn acres planted. That's their safrinha crop. And that's a story for the corn market as well, because whenever there's a good safrinha crop in Brazil, it typically cuts into U.S. corn exports in the second half of the marketing year. So we're watching that. Things look good in South America, which could keep a lid on both corn and soybeans going forward.
All right, so harvest down there, still in the pre-planting stages for farmers here. Any advice in advance of that?
I think as you look at your old crop marketing with corn and your new crop marketing with corn, we are entering a seasonal time period where it should be a good time to be executing sales on both old crop and new crop as we enter the spring season. So I think some questions you want to ask yourself is, what percent of my old crop and new crop do I want to have marketed before I plant corn? And then again, ask yourself a question, how much of those do I want to have sold before the end of June? That seasonal window is typically a good time to be executing sales for both corn and soybeans. I think if we get July futures above $4, that's been a good place to execute some sales, especially for any summer corn that you plan to move. New crop, I think there's going to be a lot of hedge pressure between 410 and 420. There's a lot of orders stacked there, so farmers can get in line and get some plans in place to make new crop sales in that window. On the soybean side, a couple things we would encourage guys to watch would be, where do you want to start selling your harvest soybeans? If we could get $9 off the combine, that seems to be a popular number with guys. And the other thing to consider is, what does your harvest basis look like in your local markets? A lot of the things that we've seen is that harvest basis is favorable right now compared to what it was this last fall. So guys may consider locking basis in for the fall, if their local markets are, favorable compared to what happened last fall when we saw basis weaken significantly.